Hey, what's going on, everybody? I hope you guys can hear me okay. My name is Dr. Boyce Watkins, and welcome to the Black Financial Channel. That's theblackfinancialchannel.com. And I wanted to come in and have a conversation with you guys. I'm actually on the road now. I'm going to a conference for startup companies in Kentucky, and I'm going to spend a lot of time talking to people about their businesses and kind of just learning what's going on, just kind of identifying the best practices that are happening out there, things like that. And you guys also know we're getting ready for the All Black National Convention, which is going to take place in Charlotte, North Carolina. If you are B1, if you believe in black family, if you believe in black wealth, if you believe in black love, if you believe in black unity, then the convention's for you. I put the tickets on allblacknationalconvention.com or boycewatkins.com. You can just go to my site and actually get a discount for the next 6 hours. Actually, you can get 30% off. And then after that, the discount will end. Hey, Alicia Smith and Sharice Clark, good to see you. Give me a yes in the chat if you can hear me. Let me know if you can hear me okay. I wanted to talk to you guys about some things I have been thinking about with this stock market in terms of where the money resides, what's going on with the market, what's going on with the economy, some things that I'm seeing, and how this is going to impact your stock market investments. And so, thank you, Ty. I appreciate that. And thank you. My name is Corey. I see you in there. Yeah. So that last week was kind of a bloodbath. I don't know. Give me a yes if you feel like last week was just kind of a terrible time to be an investor. Give me a yes if you got burned a little bit because it was pretty ugly. And the thing is that it was ugly for a lot of people. It was a really tough week, and it was really hard, to kind of hold on. And one of the things I can say to you though is that times like now are really the best times to be an investor. I want to just reiterate that to you and remind you that now, if you've got extra money to invest, this will be a good time to invest. And in fact, just to give you like something that I'm doing right now, Alicia said she bought a lot of puts. Okay, good for you, Alicia. I'm happy for you. The thing is that one investment move I am making is actually on copper. I'm actually going to look into investing in some copper mining companies and copper itself because I just read a Goldman Sachs report where they did some pretty good analysis and explained that the price of copper is expected to double by the year 2025, mainly because the demand for copper is going to keep going up and the supply of copper is going to keep going down. And so ultimately, as you see this global competition to access copper, China's sort of going crazy, trying to figure out how to buy copper mines in Africa and stuff like that. The Biden administration is trying to figure out how to solve the copper problem. This led me to conclude that a consistent, substantial investment in copper would be beneficial to my family. So you think about it. Imagine buying a house right now, and you know that the value of that house is going to be double in 3 years. Well, they really believe that the price of copper is going to be double in 3 years. So that's just a thought. It's not investment advice, but it is one of the things that I'm doing. Let, oh, now, can you guys hear me okay? Let me know if you can hear me okay. Just give me a yes, just so I can make sure I'm coming through all right, because I'm actually doing this podcast on my phone while I'm driving on the road and I'm stuck in a traffic jam. So I'm able to look down at the screen while I talk to you. So the other thing, too, is right now, last week, what was suspicious about the crash last week to me is that it all sort of had one catalyst, and the catalyst was Federal Express. That when Federal Express came out and made their announcement that their numbers were bad and that we could be heading to a worldwide recession, that literally caused the entire market to go south. I didn't like that. I just really felt that there wasn't enough time to discern whether or not FedEx was the reason that FedEx wasn't making money. I wondered if there was an overreaction. I get it. FedEx is kind of a canary in the mine. They have a deep connection to various parts of the global economy. You can gain tremendous insight into how they report their numbers, but you weren't hearing that from a lot of other multinational companies. I didn't hear Walmart and Amazon and Target and UPS and other companies coming out with this kind of warning. It was just FedEx. And I just really think that you could see a rally occur this week because I feel like FedEx's move caused the market to just go way over the top in terms of its doom and gloom reaction. So, I when I saw everything plummeting, I was buying shares and everything, including FedEx. Every penny I had sitting around, I deployed it to make more purchases on assets. Because here's the thing, right? With this market, you don't know if you hit a bottom or not. You don't know. It could go down another 10%. It could go down another 15%. Nobody knows. But you know that based on history, the market always recovers. And so, the reality is that now is when you make your money. This is when wealthy people become wealthy. You don't get wealthy after you don't get wealthy after the market goes up. If you buy when the market's high, then you're making other people wealthy. You're buying stocks that they are ready to sell because they're ready to do other things, or they're ready to finally get rid of that asset because they've already made their 80% return. When you buy at the peaks, you're following the crowd. And what's interesting is that following the crowd leads people to lose money, and then they lose money to the rich, and then they get mad at the rich. So you sit there with everybody else who's mad at rich people, when the reality is that you had people like myself and many others who have told you, like, now when the market's down, that's the best time to buy. Everything is super cheap right now. One reason for concern is that we do have the issue with the recession. We have a lot of Federal Reserve rate hikes. The Fed is going to make an announcement, I believe, next week to decide how far they want to raise rates. It's expected to be 75 basis points, uh, three quarters of 1%. So they're expected to do that, and they're expected to keep on doing it over and over and over again until they start to slow down the economy and reduce inflation. The problem is that there are some people who believe that the Federal Reserve itself may be overreacting. They there's an accusation that the Fed tends to overshoot based on economic conditions. They tend to kill fleas with sledgehammers. So when the pandemic began, there were people who felt that the Fed overreacted to the upside. They pumped too much money into the economy. They doubled the size of their balance sheet. What does that mean? Well, that means that when the Federal Reserve wants to increase the money supply, one of the things that they do is they buy bonds on the open market. Well, before the pandemic, the Federal Reserve had gotten up to $4.1 trillion worth of assets that they had purchased on the open market. That was a very high number, higher than any number in history, if I'm not mistaken. So what happened during the pandemic was they doubled that number within a very short period of time. So by doubling that from 4 trillion to 8 trillion, they literally just pumped so much money into the economy. It was kind of crazy. Now they're pulling that money out, and they're slowing down the pumping of money in because they're thinking that if they slow that down, or if they stop doing it, they can fight this inflationary problem. Well, one problem with interest rate hikes that's really kind of causing a lot of confusion right now is that when the interest rate hikes take place, they don't kick in right away. They do not kick in right away. It's not like they're going to increase interest rates and then instantly inflation is going to go down, or instantly the economy is going to, start to slow down. No, it takes like 9 months for this to happen. So they're kind of making that move. Everybody's sort of waiting to see what's going to happen. Okay, then they increase it a little bit more. Everybody waits to see what's going to happen. Well, the big problem is that later on, like you, what you did may have actually worked, but because you haven't seen the effect yet, you may have a situation where people are continuously increasing interest rates, and it's an overshoot, and it causes the economy to be devastated 9 months, 12 months from now, because you gave the economy more interest rate hikes than it actually needed to slow down. So I personally think overall, a lot of my portfolio, I'm taking a wait and see, sit tight kind of attitude. I am, continuously, I just buy in general. I just believe that being a net buyer of stocks is good policy in general. I don't believe in being a net seller of stocks. You don't really want to go short on America, when it comes to economics. Like, this country's really good at making money. There's a lot of wealth out here that's going to be made. Most of that money gets made during recessions. And if you look at people like Warren Buffett and stuff like that, they don't sell very often. They don't like to sell their assets. Wealthy people tend to buy stuff and hold it. So I would encourage you, if you want to be wealthy, do what wealthy people do. Now, what do you think of buying calls instead of stocks right now? Jimbo, buying calls, especially out of the money calls, historically is a bad strategy. It just doesn't tend to generate long-term profits. And that's hard to convince people of that, because a lot of people were making money buying out of the money call options because they're cheap. They're like a quick hit. It was like gambling for a lot of people. You bet some money, you throw out 300 and it turns into 1,000 and you get excited. So you want to do it again. The downside of calls is that that's not really investing, unless you see, call options and put options are not designed to be your whole portfolio in itself. Call options and put options are, for the most part, in my view, designed to be accessories to your investing strategy. Almost like if you go to a restaurant, you've got your steak and and your vegetables and your mashed potatoes, and then you have salt and pepper and ketchup, or salt, pepper, and steak sauce, let's say. That's extras. Those are extras. Those are enhancements to your meal. You need to have a meal. Like you go to a restaurant and you don't say, well, I'll just take a plate full of salt and a plate full of steak sauce and a plate full of ketchup. That's not a meal, right? But there are people who I'm sure have tried to do that, right? But that's not really what a meal looks like. So when you talk about options, options are Dre biz. That's a good term. They're a hedge. If I buy options because options allow me to tweak my portfolio to make it just what I want it to be. Almost the way you have a meal and you season the meal. You throw in a little salt, a little pepper, a little ketchup, a little whatever, and it makes the meal taste better. But I got to have a meal first. So typically my options I buy or sell are an extension of the stocks that I own. So, for example, in the Prime program, drboyceprime.com, if you guys want to join us, we meet once a week. I text my students 2 or 3 times a week. Some of you are in the program. Basically, that's what our focus is on sort of developing an asset base and then using options, stock options in particular, selling out of the money call options as a way to generate consistent income. There are various variables into how you choose the right options, how you choose the right stocks that you want to own, how to respond to market uptrends and downtrends and things like that. But that's kind of the main focus. And of course, we talk about some other things, option-based strategies. We end up digging into all the other stuff, butterflies and condors and everything else. But for the most part, there are strategies you can take that don't require you to do a lot of moving and shaking constantly. A lot of times when the market starts to dip, people get very nervous. I think financial anxiety, I know it's a very real thing. My wife actually does financial therapy for our prime students, and she actually just finished a book on financial anxiety. And the thing about financial anxiety, I believe, is it causes you to get jumpy feet. It causes you to feel like you got to do something because you're so stressed out. So you start selling things, you start changing things and making moves. And sometimes that's a huge mistake. In fact, a lot of times the best way, it's like if there's a thunderstorm outside, pacing back and forth isn't going to make the rain stop. Going outside is only going to get you wet. Freaking out, isn't going to help you. Taking drugs isn't going to make it better. Sometimes it's better to just sleep. And if you sleep through the thunderstorm, you wake up and you find out it was storming all night, but you were asleep, so you didn't notice. So sometimes with investors, they sleep through, theoretically speaking, they'll sleep through a downturn. Like the market will go south, stocks will go to hell, all kinds of crazy things will happen. But for some investors, ignorance becomes bliss, because literally all through the storm, they did not sell any of their assets. All through the storm, they continuously kept investing, their money every week. Maybe their 401k is putting, $200 from their paycheck in the stock market every week. And they were consistent. And then next thing you know, these people are rich. They wake up one day and they look at their portfolio and they're like, whoa, look at how much money I made. Do you understand how much money you guys would have right now in your bank account if somebody had convinced you? And we were talking about this back in 2015, by the way. I was online in 2015, even 2013, 2012. If think about this, think about how rich you would be if you had invested, say, $20 a week or something into Bitcoin and Ethereum every week and did that consistently, from 2015 until today. Despite the crash and all the chaos and all the volatility, if you had done something as basic as that, you would have tens of thousands more dollars available, to invest with than you have right now. But a lot of people felt the need to make an adjustment. The market goes south, so you start modifying your portfolio, you start selling things, you start buying things, you start making moves and moving stuff around, and you got to be real careful about that. Sometimes the best move is no move at all. That's I think that would be the big thing that's on my mind right now. So I think right now, you're in this dip, and I'm listening to all the experts. I'm reading all the reports and the studies and everything, trying to get a sense of what's going to happen. And what I have really gained clarity on is not so much what exactly is going to happen, but I've gained a tremendous amount of clarity in what the variables are, in what it is, and what's causing this environment to be what it is. So you had the FedEx event last week, which was kind of a catalyst for a major sell-off, which I think was a huge mistake and an overreaction. You also have some issues economically with China. You have a pending energy shortage that's going to occur in Europe. In Europe, they're going to have a real energy problem because of that war with Russia. That's going to cause some, some interesting stuff to happen there. The U.S. actually is in better shape than most economies throughout the world. So right now the dollar is very strong. So if you travel to Europe or whatever the case may be, you're going to find that your dollar goes a lot further than it did if you went to Europe, say 5 years ago. And so ultimately, the U.S. is actually a good place to be in terms of money. Our economy showing a lot of resiliency. Inflation is not budging very much in a couple of key areas, mainly in the cost of rent and wages. Those are two areas or components of inflation that are not adjusting. The other areas, like the cost of energy and some other things, are actually going down. So there are people who think that because of that, you're going to see drops in inflation, which will cause the Fed to slow down. But then there are other people who are saying that they believe the Fed is not going to slow down their interest rate hikes if they make any unexpected changes to in a positive direction. Like if they slow down at all because they say, hey, you know what, the economy is not as bad as what we thought, you're going to see a market rally unlike anything you've ever seen. Right now, a lot of money is hiding in the corners, is hiding in the caves. Not, because it doesn't want to go outside and kind of get taken out. But as soon as it's clear to come outside, you're going to start seeing these economies start to take off. In fact, also, even in the crypto space, I'm a big believer that Bitcoin and Ethereum are going to just rock the world over the next, 7 to 8 years. I mentioned to you guys the other day, I've substantially increased my investments in Bitcoin. Also, I mentioned earlier on this podcast that I want to invest more heavily in copper. Copper is expected to double in price by the year 2025. So feel free to join our program, drboyceprime.com, if you want to take a look. We meet on a very regular basis. We have a metaverse campus that our students have access to, and a lot of other benefits. So feel free to come take a look at that. And also, we're going to do some investment stuff at the All Black National Convention. So if you guys would like to come to the convention, just go to allblacknationalconvention.com. It's really good. All right, guys. So I'm going to get on out of here. I just wanted to call in and say hi. I'll check back in a little bit later, and I hope you have a great day. And remember, when it comes to investing, just be consistent, pick your strategy, and stay with it. Don't freak out and sort of try to react to every little thing that you see, because I think that'll be a huge mistake, and I think it's going to cost you some money. So have a good night, everybody. Thank you for listening. I'll talk to you guys later. Peace.